Hey, good morning, ladies and gentlemen. How's everybody doing today? Everybody doing good? We're doing good. Everybody doing good. We're all doing good. Oh, gotta turn that off. There we go. All right, so thank you guys once again for tuning in to another pre-market watch list. We're going to be covering some stocks, doing the whole jazz thing as normal. You guys know the deal, so thank you guys again for tuning in. As many of you know, yesterday was a pretty crazy day. We've seen the markets bounce pretty wild. So there's a lot of people, a lot of optimism in the market right now. Everyone's like, oh, it's the bottom. It's the time to buy. When in reality, it's probably not the time to buy. Now, I would be lying if I say I didn't buy. I did buy yesterday. So I'd be lying if I said I didn't buy, but I did. But this isn't the buy that investors are looking for. This is the kind of buy traders were looking for, right? We had that move that worked well for trading, but if you're investing, you're really just walking into a booby trap, okay? So realistically, this isn't the time to buy, okay? Good morning, everybody. Good morning. Yeah, if you bought TVIX yesterday at the close, you're doing pretty well this morning. So all in all, markets had an extremely hot day yesterday. The Dow Jones put in like it's a record-breaking bull run ever in one day. Sweet. CNBC was pumping the absolute crap out of this bull run yesterday. So regardless, personally, I think we might see one more attempt at a bullish day, which is today. That's all I see. I see maybe one, maybe two more bullish days, if that, and that's it. This is our retrace back up. We'll probably hit the 9 moving average on the daily chart. We'll probably either hit a 60% retracement on our Fibonacci extensions. So regardless of the technical terms, this bounce here in the market's probably not going to last too long. It's going to be a short-lived bounce, and then we're going to be continuing back in that downtrend, okay? Yeah, I'm thinking maybe one more day. I'm thinking like today we might go up and retest the previous after hours or maybe somewhere near the highs from yesterday, but that's really all I see. You can see right now pre-market it's struggling to even get up. So let's get into screen share here. Pop that on. That's really big. Let's get that. Let's size that down just a hair. There you go. All right, guys. So this is the market. We went on a massive bull run yesterday. You can see this morning pre-market, it's kind of just channeling back and forth, and not really doing a whole lot. Personally, I want the market to push up out of the gates because I'm long since yesterday. I actually held through all of this. So I'm waking up this morning to a mean gap down, which is not going to feel pretty when I wake up. So we're probably going to lose 3, 4, 5 grand overnight when the market opens, unfortunately. But it is what it is. So, you know, with the way it closed and this gap down, it's got a lot of work it would have to do to get back up to even, push through previous highs. So chances are we won't see that. What we'll most likely see, if anything, going up, we'll probably see a move higher up towards the $245 price, maybe a bit higher depending on how many buyers come in. And then once we get up to 245 in the market, we'll probably see some sellers start coming in trying to hammer this price back down. If we fail to get over 245s or the 240, like 246.90, 247 level today, then we'll probably be seeing this thing start failing today or tomorrow, okay? Yeah, we're going to be heading into a new earnings season here. We really already are, but that's going to be another important thing depending on how the earnings all play out. So again, right, when we look at this, we're going to go look at this daily chart here. So looking at the daily chart, we had a massive buyback, right? We're still a little bit of ways away from the 9 moving average, okay? If you look at a 180-day chart, you had this massive push up, and then you have this massive gap down overnight. So again, I think what we'll see is a move back up on the market towards these previous highs, and then we'll probably see the market kind of sell off and then start rolling over again. So in the next couple days, it'd probably be a good idea for some of you guys to start considering getting short or being short bias on the market in the next couple days or so. that's going to be kind of where I'm at. So for me, I'm going to be looking at getting short on the market here in these next couple days, depending on how the market acts here. Okay. I do believe this is just a small dead cat bounce. So if we do believe the market's going to continue back down, right? We do think it's going to keep going in that direction. What do you think you guys should do? You should probably watch things like your volatility ETF. Literally, my watch lists are going to be the exact same every single morning. Until the markets settle and they're not extremely volatile, the watch list is the same every single day. Every single day, it's the same thing. All you got to do is watch your large cap stocks, and all you got to do is watch your volatility ETFs and the stock market. Doing all that, you should be good to go because you don't have to search really for things to play. They're already handed out to you. All you have to do is watch the market. So again, right, what I've been doing is trading a lot of large cap stocks. I haven't really been messing around with the volatility ETFs. It just haven't been, but that's another good area where you guys can definitely be making money, okay? We go over shorting. We basically our trading course, Boardroom Trading, the premium course. It's really geared towards day trading. We don't really do too much with swing trading in there. There's like swing trading and options trading we don't do in the premium service. That's something that is really going to be introduced primarily in our elites program. That's something else we're working on. It's going to be in the future. But yeah, our premium day trading course we have now is primarily geared all toward day trading. We go over shorting and scanners and things like that, but it's all primarily geared towards a day trading, kind of setting. Options trading is only going to be, something that we introduce in our elites program primarily. We'll probably do a little bit here and there in premium or, here on YouTube in the future. Sometimes I'm day trading options. Sometimes I'm, swing trading them. Just kind of depends. All right. So we know the markets had a big bounce. We know they're pulling back pretty aggressive. So when you look at TVIX, if you look at a volatility ETF today, you'll see they're gapping up really big, right? Let me pop it on. So you can see this gap up, right? So the reason we're gapping up today is because the market had such a big gap down, right? So if we put this like this back to back here, right, you can see this big gap down, this big gap up. So they're basically exact opposites of each other. So for those of you that have been finding it hard to trade in this market because you just can't seem to find anything that might be going up, then you really should focus your attention towards things like TVIX or VXX, UVXY, these volatility ETFs, because they're primarily going up when the market goes down. The cost, we only have one, and that's $30. Yeah, it's $30 per month, actually. But yeah, $30 a month. I mean, guys, it's like I want to come on here and be like, hey, check out this and look at this, but there's really none of that to do. I would love to be like, oh, do this today and do that, but there's really no stocks that I'm specifically focused on. It's all about the market right now. The market's hot, both up since yesterday and down for weeks, right? And that's primarily all I'm playing. And until we have, and I don't think there's really been any great penny stock this morning. There really isn't any penny stocks this morning. There's really not a whole lot, right? So honestly, I mean, your best bet today is definitely going to be keeping an eye on your volatility ETFs, guys. SQQ, I'll take a look at SQQ. You said SQQQ. Yeah. So SQQQ, right? Like, yeah, I mean, here's another thing. It's just another ETF. This is an ETF that, basically goes against the market, right? Or sorry, does the exact opposite of the market, really. So this is another one you could follow, but this is a ProShares SQQ. So that's probably one that follows the Dow Jones, I believe. Why do I keep doing that? Let's see. Okay, yeah. So the SQQ, that one follows the NASDAQ 100. Yeah. So if you're going to be trading SQQ or anything Q related, you're better off following the NASDAQ composite because that's the ETF that would relate to. Any of the QQQ ETFs are going to relate to the NASDAQ composite. That's what you'd want to follow. Yeah, so hold on one second. I'll touch on that. Since we're pretty much covered here on stocks today, guys. I mean, it's simple. Follow the markets, follow volatility ETFs, TQQ, SQQ. Those are going to be NASDAQ composites. You know, any of the VXX or TVIXs are going to be your volatility ETFs and so on. For those of you that had, so here's another thing I will mention because so many people, I got a lot of comments on the YouTube video from last night about the video I made, the small account Robinhood growth challenge video. I got a lot of questions of how are you doing this while under PDT, or how are you getting around? I'm not getting around PDT. I'm just using my account. It's not over 25,000. My account is not any different than anybody else's. You've seen the value of it. The value is below 25,000, which means I'm still restricted to doing only 3-day trades per week, right? So I am under the same account as anybody else on that Robinhood account, you know, and I have 3-day trades per week, you know, if I choose to use them or not, right? You know, I might buy something and hold it overnight and I use no day trades, right? You know, so yeah, so it's the same account. It's a pattern day trading or still under that restriction. I'm not over 25,000. That account has been used from $2,000 up to 22,000, probably more like 19 to 18,000 this morning because of that drop overnight, unfortunately. But yeah, it's all been under a pattern day trading account. So what do I think about oil? You know what's funny is this whole time I've never been someone to like really focus on oil. It just was never my gig. And oil's been going nuts recently. I know it's been decreasing and I haven't really followed it too closely, but it was something that after this recent decline, I was like, wow, I really need to up my game and focus more attention over on oil just so I know it personally. So it's not something that I have a ton of knowledge on right now, but when I know it well in the future, you guys will know as well too. I always share basically everything I know goes on YouTube one way or the other, in some video, some way, some format, some spiel, some lessons, something, some lecture. It goes on there one way or the other. So I just don't follow oil closely enough to the point where I'm comfortable talking about it. I mean, I could look at the charts and tell you what I think technically wise, but fundamentally, you know, in keeping up with the news, I don't know enough. So, Yep. American expert. Yep. Most people in here will have no clue what that means. But yep, you're right. You could buy and then you could sell the opposite. Contract and lock in the profit, ride it till the next day, close out your sell, and then you can close out your position. Yep. Absolutely. That's smart. I'm glad you know that. The markets will most likely stabilize in 2 to 3 years. So you have 2 to 3 years, most likely. You have 2 to 3 years before we're going to see probably the markets bottom out. Hell, maybe even longer. Like I said, guys, there is a possibility that we are on what's called a super cycle. If we're on a super cycle recession, then I wouldn't even want to say recession. If we're on, so there's maybe I'll do a video on it. But just for the purposes of this video, I'll make it kind of short. If you want, you can Google it. You can Google the boom and bust. I think it's literally, I have the article. It's literally downstairs on my nightstand as I was reading it a couple weeks ago. It's literally right there. I could just walk down there and get it, but I'm not going to do that. No, I'm too lazy. But it's like a boom and bust theory, super cycle theory, and you guys have probably heard it, but the idea is that, I'll try and make this simple. The idea is that since God, I can't remember if it was the Great Depression or if it was the dot-com bubble. Anyways, I'll have more for you on that later. But basically, I think it was taking the last, like over the past 100 years of data and research, that there's a cycle that happens where we constantly go through a boom and bust phase, right? There's always a boom and bust, right? We go through a big economic boom and then we go through the big bust, right? And in theory, where we're at in this so-called cycle, we are supposed to be on like the third wave or the third cycle, I believe. And the third cycle is supposed to be the worst bust out of all. Meaning, if this were to come true, you could expect that our market will be worse or the same. It will be the same, if not worse, than the Great Depression. Like, that's how bad that third cycle bust is supposed to be. So bad that it would make the Great Depression look like a joke. That is the theory behind the third cycle bust. Now, I know everyone's going to go, that's crazy. That can't happen. There's no way. And I mean, dude, it's totally possible. Okay, guys? Just because it's 2018 and now that we have phones that can tell you exactly where to go and how to cook your food and to do all this, and now that we have artificial intelligence that can do this and do that, it does not mean that humans have become any smarter at anything. Okay, just because we've created more and we're more advanced, it doesn't mean that we can't make bad mistakes or make any of the same mistakes we've made in the past. Okay, humans are notorious for making the same mistake over and over and over again. And as history shows and repeats itself, we're pretty damn good at doing the same thing over and over and over. Okay, so chances are it's not that far-fetched. Okay. Yeah. So I literally have the article downstairs. I probably won't be able to get anything out tonight because I got to pack and then go to Miami tomorrow morning. But I'll try and I'll reread the article to freshen up on it, and then I'll come back and kind of do like a small video and kind of walk you guys through that whole super cycle ordeal. Anyways, I got to get back to the private group now. Thank you guys for tuning in. As always, I will see you guys again tomorrow morning. I know we didn't cover a whole lot in terms of stocks today, but you know, it is what it is. I can only provide so much of what the market's offering. All right, guys, so take care. Volatility ETFs. Be patient today. Do not jump the gun on anything and watch large cap stocks. That's what I got for you guys today. I'll see you guys all not tomorrow morning because I will be at the airport, and that will be Thursday, and then it will be Friday. I will see you guys Friday morning, and then Monday morning. Is Monday New Year's or is that New Year's Eve Monday? New Year's Monday. So wait, what? I'm confused now. Oh, there we go. So Tuesday would be New Year's Day. So yeah, I'll probably see you guys on Tuesday, maybe Wednesday morning, but I'll be leaving on another flight. So anyways, we'll figure it out. All right, guys. Anyways, take care. I'll see you guys all. I don't know. I'll see you when I see you. I can't remember all the dates anymore. I'm losing my mind. I'll see you guys soon. All right. Take care.